I'm going to start with the burning question that everybody is talking about, even though for me, I don't really care that much about it, to be honest with you, but everybody that's tracking it, where are we with the gold-silver ratio? So this was through yesterday. So at this point, we have broken that $50 level that I talked about, and we are at a 38 to 48.35 to 1 ratio. Okay, so where's it going to go from here? Well, in 2011, it got as low as 31.6. So that would be the next level of support and where I would expect it to go. I will let you know if we break through that, if we bounce off of it, whatever, I'll pay attention for you. And then we can talk about it on Tuesdays. But this would be my next stop, 31.60 on that ratio. However, here's the thing. I mean, the ratio trading was set up as a trade. That's why I don't really, I use it as a signal because what was happening in April of 2011. And do you remember when silver hit a peak of just shy of 50, right? And started to form that second cup that we've talked about. So silver is the fuse. It is what goes first. So we would expect this decline, even like we saw when I showed you the chart from Germany back in the 20s. So that ratio grows more narrow, and then once the hyperinflation kicks in, then it grows wider again. But you aren't going to sell your silver and convert it back into fiat. Maybe if you have, I don't want to say too much because quite frankly, I don't think that you ever have too much gold or too much silver. But it depends on how you've built your position. So you're always welcome to give us a call, have that conversation. We can lay out what your strategy should look like, and then you can make educated choices. So this is where we stand with that, but I really need to talk about the most important thing that's actually happening now, which is what's going on in the global bond markets and out of Tokyo. The Tokyo whale, I'm going back to 2016 on this because there are always unintended consequences. And what I'm also trying to show you is that the choices that are made over here, well, governments and central banks like distance between the choices that they make here and how they're delivered to you so that you don't connect the two. But I'm bringing this up because Japan has been setting the rule book for all of this alphabet soup of quantitative easing, QE, QT, double QT with the nose on the top or whatever. All it is financial engineering that may postpone the inevitable, but it does not eliminate the inevitable. And so what did they do? In order to support their stock market, the whale gobbled up tons and tons of stock, like 90% of the Nikkei 225, which is what you're looking at here. I'd like you to look. Yep, they just broke out of that cup formation. Can you see that? And look at, even as their bond market is in massive distress, you see their stock market making new highs. But they are the top shareholder. And so once they started buying in a very pervasive way, it made things look okay, but that's just engineering. That's all that it is. And we're going to see what happens from it. But this melt up part, I particularly bring that up because I believe that we are in melt up. I've been talking about it for a while now. And that's the markets melting up. There's all sorts of bad news that's coming out right now, and especially in their debt markets, which is the biggest and most important markets in the world. Not necessarily Japan's debt markets, but just the debt markets as a whole. So there, the stock market is just screaming up. Makes it look good, but it's really a flight to safety. And again, going back to 2025, by 2025, the Bank of Japan now owns more than 52% of all Japanese government bonds. And that was what? Back in April. So it's higher than that now. So what do? Why are they buying stocks and they're buying bonds? It's called perception management. If they can make you perceive something, then they can dictate how you move forward. Don't be fooled, because what's happening is the markets are losing confidence. This is the 10-year Japanese government bond, and look at where that interest rate is. It will spike above that more than likely, right? But you see that cup formation, it's going to go back to more new highs, just like it is here in the US, in Europe, in China, everywhere else. This is not just one little isolated incident. Oh, that's Japan. But does it completely annihilate the carry trade where you buy it with a much lower or even negative interest rates you borrow from Japan at negative rates, and then you go out and you put it into some other asset or instrument that will give you a higher yield? Well, with interest rates at this level, that trade is dead. But it doesn't mean, oh, it's gone. Boom. There are no consequences. Yes, there are consequences, because traders have to unwind their positions, which puts pressure on global stock markets as well as global bond markets. And the derivative markets, those are so opaque, we can't see what's really happening in them. But I could tell you, just like 15 years of zero interest rate policy, remember how that works. Interest rates, market value of the bonds. This is when it's issued. So when interest rates go up like we're seeing it now, the market value of the bond goes down. As long as there's not a run on the banks, that truth can be hidden. But when there is a run on the banks, then the banks are forced to sell these underwater debt instruments, and it becomes more clear because that pushes interest rates up even more and market value of the debt down even more. And it's more than just bonds, right? A mortgage is a debt instrument, a car loan, a student loan. Any kind of debt is really going to be majorly impacted by these interest rates, because now they have to roll it over in a higher interest rate environment. And you might recall the interest on the debt that the US is paying and how that's gone up exponential. So that's what we're looking at here, because the 40-year bond, so again, just as a reminder, right? If this is when the bond is issued and this is when it matures, look at the further out the maturity, the greater the market price swings. So the closer it is to when issued, the short-term bills that our government's issuing a ton of, especially with stable coins, right? That will have less of a movement when interest rates move. But these 30, 20, 30, 40-year bonds, that's where you get the greatest movement. And so a lot of governments have been going shorter and shorter and shorter and shorter term. The problem is then they have to roll that debt over and pay even higher interest rates on it. So this is historic, because this is not ever, I don't think the Japanese 40-year bond has ever been this high since it was issued. And a seismic repricing of risk across Asia with global bond market implications. That's what we're seeing here, is that loss of confidence. And we've talked about confidence a lot. We will keep talking about confidence, because every single Ponzi scheme has two key requirements, period, end of discussion. If you miss either one of them, it's game over. One is new money. Okay, they got that covered. They can just print it. No big deal. They'll just print it and devalue all the currencies that are out there. But the other is confidence. And remember, we've talked about this where we watched the layer of confidence, bank to bank, that went bye-bye in 2008 when the banks stopped lending to each other. Central bank to central bank, that was 2015 with the Swiss surprise when the Swiss central bank kept vowing to maintain the peg to the euro and then at the last minute broke that peg. That one's gone. And 2022, market to central bank confidence when they kept promising that they were only going to raise rates 50 basis points. And then at the last minute, and I will never understand why they gave this away, never, but they did 75 basis points. One layer of confidence remains, but the spiking global interest rates that we are experiencing right now, because it's not just in Japan, is showing you that the bond markets, the largest foundation, how money is created in this system, it's breaking down. And this is huge. We still have the public to do it, but a headline that I saw this morning, I haven't read it yet, and I haven't had time to do anything else with it, but I promise I will, is that consumer confidence plummeted to 2014 levels. What was happening in 2014? Sovereign debt crisis, right? So there was a bond market crisis that was happening. Most of that centered in Europe, but make no mistake, we are incestuously interconnected. So it doesn't really matter where it starts. It will finish with the world. Because much as we talk about deglobalization, and certainly in some areas that's happening, but not in the financial area, that's getting more and more globalized. And a move that they want to go toward a one world currency. So how has this impacted the equity market, the stock markets? Well, you see it. This is equity volatility rises after sharp sell-off in JGBs, so in the Japanese government bonds. That white line are the 30-year JGBs. Look at how that interest rate spiked. I mean, that's exponential. It's straight up, right? And there's the Nike volatility. I already showed you how it was making new all-time highs in a flight to safety bid. It's not so safe. I mean, the government owns all of the stock market too. Do you really want the government and the central banks to dictate every single thing to you? Because that's where we're headed. That's why you have to have physical gold and silver in your possession. That's why coming together in local community to create that surety in food, water, energy, security, barterability, wealth preservation, and shelter. We got to get this done, and it takes a community. So locally to create surety in all those mantra areas, and globally to, I don't know, how about taking our power back by putting redeemable gold in the system so that you don't like what you sing, you go in and you pull the gold, and that forces flipping fiscal responsibility. The volatility is frankly caca. Why? Because the government can go in. Do you remember? I was there on Black Monday in 1987. I was there. That's when the plunge protection team was born. Do you think you're really seeing anything that's real in these markets? It's just a wealth and risk transfer mechanism. And the wealth is not going to float your way because we all know my $10 trillion Zimbabwe note, of which I can buy absolutely nothing. But let's take a look at some of the pattern shifts that we see here, because quite frankly, it is not what we're seeing today is not surprising because we've gotten the warnings, and that's in pattern shifts. So at the beginning of this chart, you can see how the stock market volatility was right. It was congruent. It was right along with the yield on the 30-year JGBs. That would be a controlled demolition. But all of a sudden, there's this massive spike of volatility back in April of, I think this chart goes back to 2024. This huge spike. People only notice when things happen quickly, but that's why they trained us to think shorter. That happened 15 seconds ago. That's old news. No, it isn't. If you learn how to read these pattern shifts, that gives you a heads up, even if you don't necessarily know why or what's going to happen next. But that was when the yen carry trade really started to unravel. You can see the difference between the two. One was overlapping, and then they got control of it. And it was kind of like the yield is up, and then the volatility nice and calm in there until we get toward the end. And then there was a major downward push in volatility. They can do that just by derivative contracts. This is not that big of a deal for them. It costs them nothing. And by the way, they just print the money anyway, so it truly costs them nothing. But then there was a larger spike in that volatility. Can you see it? And that spike started before this rapid rise in the 30-year JGBs. Understanding when patterns shift, not even having to know what it means afterwards, but you know that something is changing. And what we're really experiencing is a structural shift in the bond markets, because what creates money in these markets? The full faith and credit of the government. And so the spike in these interest rates is showing that loss of confidence. And the breakdown in the communication from nation to nation. I mean, we don't live in the same world that we lived in. Even before 2025. And it was already changing from 2020. And that was already the changing from 2008. And in my opinion, that's when the system died. That's when I personally went, oh crap. Yeah, I'd been accumulating gold and silver because I knew this was a currency life cycle issue, and I knew how undervalued gold and silver was, and I knew that this couldn't last forever. I didn't think I would see it in my lifetime, but here it is. And I have been born and groomed for this moment in time. And if I can help you recognize when there's a pattern change, if I can help you become your own central bank and become absolutely as independent and self-sufficient inside of community as possible, that's what I'm going to do. And if I can get redeemable gold back in the monetary system for the world, let's change the world. I don't like the direction it's going in. Let's do something about it, because I think you're here, so you feel the same way. And I'm going to show you the Japanese yen. This is to the US dollar. So over this is just a month chart, right? We're looking short term. Look at the drops in it. But the US dollar to the Japanese yen is actually stronger than the dollar. You know why? Because it's relative. It's one fiat currency to another fiat currency. They are both garbage. Doesn't matter which one. But you and I could be listening to these talking heads and they go, oh, the dollar is strong against blah, 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 or the dollar is weaker against blah. That is only matters when you're traveling, because in all cases, every single case of the fiat money, every single case, the money is losing value, even as we're sitting here and speaking. And I have a gold back here, so that shouldn't be in that mix. Okay, so you can see the drastic shift in the Japanese yen to the dollar. But let's look at there we go. Let's look at the spot silver market. In the last month, that's up 34%, over 30, almost 35%. In I think I did this to the month. Yep, 1 month. Now look, The reality is prices of gold and silver have been suppressed forever because a rising gold price is an indication of a failing currency. Can you see that the currencies are failing now? And I'll show you too. Look at this very interesting pattern that I saw where you would have a flat line and then a spike and flat line and spike, flat line and spike. I find this to be quite an interesting and telling pattern. It's almost like you can see the confidence eroding when you're looking at this chart. And finally, we'll look at spot gold. Now, you see similar kind of patterns, a little different to silver, but basically that same kind of pattern and that same kind of spike in the end. And how did that, Bitcoin was supposed to be digital gold. Is it digital gold? No. The world has spoken. Now, look, I'm not saying that they can't manipulate it because it's still pretty shocking to me that you see bankers and governments and central bankers rushing for adoption on this stuff. Why is it below 90,000? I mean, I could tell you what the fundamental value of an ounce of gold is. I can't tell you what the fundamental value of Bitcoin is because we don't have enough history to know what that is. With gold and with silver, oh, heck yeah. We've got thousands of years of history to determine that. And I know, and it's okay. You do whatever you want. I'm not telling you that you shouldn't own Bitcoin. But what I am telling you is if you do make that choice, make sure you are properly diversified because this Bitcoin, this is just a physical representation. There is no physical body for it, is not this. This uses energy. This stores energy. This is based on formulas. This is based on work. This is used in one place. This is used in 33 places. It's entirely up to you. You do whatever you're comfortable with, but it looks like the jury is saying, no, this is not gold. And of course, we recently saw that Jeffries sell Bitcoin, buy gold. Why? Because all you can do is convert it into this stuff. That means that whatever's really happening to this stuff should also be happening to the risk markets. That's what's happening. Because if you can only, that's my $10 trillion Zimbabwe note. Goodness gracious, there's nothing else that I can do with it, is there? But convert it into, in this country, dollars. Just saying. And hedge fund titan Ken Griffin said Japan's bond market rebellion is a warning sign that the U.S. needs to shape up its finances. But they can't do it because they're backed into a corner. And all they really have is as much of this as they can do. Because, hey, I said this was going to happen. It's happened where the Federal Reserve were allowing their balance sheet to run off, which means that they were not reinvesting the dividends or the principal when a bond matured. They were just allowing it to go away and then not reinvesting the money. But they've turned around and they've started buying again. I think it's at $40 billion a month. I could be off on that, but they're buying again. They have to because we don't have anything to prop this up. Now, I'm not saying they can't come up with something that I haven't thought of because they certainly did that with QE. I'm not going to lie. I didn't see QE coming, but they used it up. And how much room is there on the balance sheet? I mean, it was less than $800 billion in 2008 when they did this massive, they started the QE, and we were appalled by that. But that's all that they have. And all of that new money that they printed and pushed into the system, it's sloshing around there. Why is real estate up and stocks up and bonds up and all of this? Because of all of that new money. It's not that they create it and then it disappears, but Japan's bond market rebellion, it's a warning sign, and there's nothing that the world can do. Are they going to stop spending? Oh, heck no. But here's the piece, right? As Americans pinch pennies, Goodwill sees a resurgence. Goodwill stores are thriving, which is good news for them, but that's really an indication of people that are still shopping, but they are trading down. And again, this one, economic fear running deep. Yes, because it's the affordability factor. So what are they going to do? They're going to issue stimulus checks? What would that do? It would devalue the currency even more. All of these things that were supposed to stimulate the economy, well, they did for those at the top of the K, but they didn't for those at the bottom. And that's where 99% of us are. You want to eliminate their ability to create that K-shaped economy? Take our power back. One person can't do it, but if you're part of a group and we can get 3% of the population to do it, we can get that in the system. We just have to demand it. Because what happens in Japan does not stay in Japan, because we are all incestuously interconnected. And the spike in long-term government bonds has spread to the US, the UK, Canada, and others. Yes, the Ponzi scheme is falling apart. Can you see that? Because I see it loud and clear. And much as we want to think, oh, the dollar can never go away, the dollar has gone away. I show you the purchasing power chart all the time. But you know what? I have in here, this is a U.S. Confederate bill. Gone. I can't use this to buy anything. I probably didn't even spend $5 on it because I don't spend a lot of even fiat money on this. So, gone away. It's a U.S. bill. I've got state bills here. Here, gone. This is a U.S. money currency. Used to be. Not anymore. This is a U.S. currency. This gold certificate. Can't use that anymore. I hope you see my point, which is that all these different things that governments will do and central bankers will do to lie to you, that is their job. They lie, and then they lie some more. What you're seeing in the gold and the silver markets, and I'm not talking about spot, I'm talking about the physical markets, that's the truth. 33 different areas between government agencies, manufacturing, industrial, collectible, etc. 33, and not an exclusive list, users of gold. 36 users of silver. Silver gets used up, doesn't it? Huge, huge, huge demand in silver. Silver is the fuse. It moves first. Gold, indestructible. It is the anchor. You need both. And even at these lofty appearing, seeming, lofty fiat money prices, this is not gold and silver going up. And that's really what I'm trying to tell you. It's really about the breakdown in the current fiat currency and money system. Where do you want to be when we lose all choices? Because I want to make sure that I have surety, food, water, energy, security, barterability, wealth preservation, community, and shelter. And we've got to keep growing this community because we have to make a positive difference in the world. It's why we're here. We need to come together and help each other. and have some patience with each other. And until next we meet, please be safe out there. Bye-bye.